Crypto markets fade after a brief relief rally. Mt. Gox selling coins is likely going to keep a lid on BTC. But with the merge drawing even closer, we are looking for opportunities to get long ETH over the next month. Weekly vol goes bid into CPI data, but the rest of the curve remains under pressure. Finally, skew starts to bounce as hedges come back in. All this and more in this week's Crypto Insight. So crypto this week, Bitcoin starts to go down again. So what did we say? We said that we thought that the latest rally that we saw late last week was smelling like a textbook fourth wave correction. Okay. And if we zoom in on it, you can see that here, right? So you had the brutal sell-off, which is your kind of standard textbook third wave. And then you get a bounce, which is an A. You get a pullback, which is a B. And you get a final move, which is a C, before resuming the downtrend, right? And that seems to be what's playing out here for now. I mean, obviously, the thing about Elliott wave is like price action can negate your wave count, right? So if we suddenly get a bounce and an aggressive one and we rip back up to 24K, then it probably means the fourth wave isn't complete yet, basically, right? But I was thinking that it probably is complete. And, you know, I wasn't believing that price action, which is why in the Vol dashboard product last week, on Friday, I signaled that risk reversals are looking quite good here, given that the skew's flattened, given that spots rallied. So if you haven't already protected your stack, hashtag, then you need to think about doing some risk reversals, basically, right? So that was the idea, basically. Okay, in terms of what else we're seeing, you know, target wise, you know, there's no reason why we can't go to sort of 10 to 12K as the ultimate resolution of the sell-off. It still looks very likely that this downtrend, you know, doesn't reach a conclusion until there, if we vol adjust the move to where we think equities might go. So if equities at 3,800, right, and equities is potentially going into the low 3,000s, it's got maybe a 20% sell-off, right? If equities got a 20% sell-off, and then you vol adjust to say, well, what does that mean for crypto, assuming that that goes down with it? Well, equities on a 25 vol and crypto's on an 80 vol, basically, right? Or 70, 80 vol. So it's about 3 times the volatility. So that could mean that a 20% move in equities translates to something like a 50 to 60% move in crypto, which pretty much gets us back down to 10K, right, in Bitcoin. So that would be how I'd come up with that rough ballpark of how low we could go if the S&P's got 20% downside still, basically. And we maintain our correlation to stocks, right? Which I think we will. Now, speaking of that correlation, the correlation has been falling recently. I think it got to, you know, a high S&P Bitcoin correlation, 60-day rolling, got to a high of above 70. Now it's closer to 50, basically, right? So whilst it's come down, it's still, you know, it's still kind of 50, and it's still considerably higher than it was in past cycles in Bitcoin before 2020, when a bunch of institutions got involved, basically, right? So that's just something to, you know, be aware of, that it's not going to be a completely escape sell-off in stocks, I don't think, even if it's had a lot of liquidation already, right? And then speaking of liquidation and flows in the market that might push it down, there's that news of Mt. Gox selling 140,000 Bitcoin in August, right? So very hard for it to rally if you've got a massive buyer supplying Bitcoins to the street throughout the month of August, right? So that, if anything, that's going to empower the call sellers to be smashing out calls in August and September, because it's going to keep a lid on the price, okay? So that's what I would say on Bitcoin, right? If we then look at the ETH, what's going on in ETH, so bring up the spread is probably the easiest place to kind of look at it. So the spread has rolled over again. It kind of had bounced. It rolled over in line with just general crypto prices, but there's some reasonable good news on the merge, right? So last week, Ethereum's testnet I think it's Sepolia, if that's how you pronounce it, that successfully merged onto the Beacon chain. So that was like the second practice run for the transition to proof of stake. That went without any glitches, without any issues. There's a third run coming potentially in 3 to 4 weeks where they're going to merge another test net. I can't pronounce Goerli. I don't know how to pronounce it, which is, if that's successful, then that's going to set up the main event to actually do the merge. Okay. And then we're going to get far more clarity on timing. I don't know if it's going to be a month, 2 months from that, who knows? So that's kind of what we're thinking there, right? So if we get that successful third run with that next testnet merge in a month's time, then that might be the time to start buying into this spread, because by then we might have also had some equity weakness that takes crypto down another down leg. And this thing might get to a nice entry point, right? If the ETH Bitcoin cross can get to 0.048, that looks like quite a nice entry point, right? On a longer term basis, which then might set up for some nice trades to play ETH versus Bitcoin upside, which you know I like to do, right? Then that might be the way to play the merge and get some real leverage to the idea that ETH could have, you know, a move from there back up to kind of the top end of that range, you know, is a pretty healthy outperformance of Ethereum, right? So, I mean, if we look at the price range, that would be a 30% outperformance, right? So that's what you're playing for potentially. If we can get down there into crypto weakness, we could put on some trades that could benefit from a 30% outperformance on the back of the catalyst of the merge upcoming and people getting excited about that, basically, right? And then on top of that, you've got the headwind that Bitcoin has from the release of all those Mt. Gox coins, basically, right? So that both those factors could play into that trade, which is quite nice, right? You want to have a few things working for you when you do a relative spread like that. And we may well get that set up, which I'll be on the lookout for. And then that's kind of it for me in terms of summary. Like, alts are quiet as hell, nothing going on really. So I'll just hand over to Aaron.
Everyone's had a good week since we spoke last, and this is on chain for this week. Starting out with looking at Glassnode, the general theme that I kind of got from their analysis this week was time under pressure builds diamond hands, as they were really looking at the long-term holders as kind of being this last cohort that needs to capitulate, and very well might be in the midst of said capitulation, which we will look at right now. So starting out here in the top left, we have the long-term holder spent output profit ratio, commonly referred in the space as SOPR. It's basically looking at the price sold divided by the price paid for coins that have been held for at least over the last year, as a way to quantify realized losses. So as you can see here, down here in the chart, we dropped below 1 down to 0.67, basically indicating that on a whole, these long-term holders are selling and they're realizing a loss of roughly 33%. But you could see, if we kind of look back through history, this is not quite the deep lows we've seen in the past, more so than the flash crash of COVID, but not reaching the lows of the 2018-2019 bear market or 2014-2015, where the long-term holders there were realizing losses over 50%. From there, we can move to the top right, whereas the SOPR was looking at realized losses. Now we have the long-term holder market value to realized value, MVRV, which is looking at unrealized losses. And so basically what you can see, once again, long-term holders, coins that have been held for over a year, we're once again down below that 1, down to 0.86, which is basically indicating that these unrealized loss, these coins that haven't been sold in aggregate, these long-term holders are looking at basically a 14% loss. And you can see, once again, if we look back at previous points, previous bear markets, this is a low, but it's not quite the low, not quite the pain we've seen previously, more so than COVID, but not of the previous bear markets, 2015, another 2015, and then the 2011. And you can see the duration is much longer in these extended bear markets. And so they're using the SOPR and the MVRV to distinguish how we got into that long-term holder capitulation. Are they finally throwing in the towel? And so in the bottom left, they combine the two to create the long-term holder capitulation tracking. And they also throw in the long-term holder cost basis, which is basically just the realized price, the price of these coins the last time they were moved on chain. And so what you can see here is we have these green shaded areas. These are the areas where at the same time at SOPR and MVRV both went under 1. that's realized and unrealized losses. And basically what you can see is it's only happened twice previously, 2018, 2019, then 2014, 2015 bear market. And then at the same time, when that's happened, price has traded below that long-term holder cost basis, which right now is around 22.3 thousand. But one thing you will notice is, once again, kind of like the previous two charts, we aren't quite at the lows at the depths that we saw in these previous bear markets. And when we trade below that cost basis, that long-term holder cost basis, it's not something that dips below and comes right back. You can see that it traded on there under that point for a good while before things were able to turn around. And it's also worth noting that basically when we're with price, that cost basis at 22.3 thousand, before we had this kind of another drop this morning below 20,000, even though they're realizing losses around 33%, that cost basis is really only roughly 6% above the prices trading below only 6%. So it's basically Glassnode indicating that the long-term holders selling right now are probably people who bought closer to that 1 year mark, maybe around all-time highs, but the people with more conviction that bought in the previous cycle seem to still be holding on. And so that kind of takes us right here to our last chart in the bottom right, which is looking at the long-term and short-term holder supply and profit and loss. And so basically what you see is when we reach these deep capitulation moments, these deep bear markets, we have a distribution, a reshuffling of coins, where the coins move from short-term holders to long-term holders, to the point where the long-term holders really shoulder pretty much almost all of the coins sitting in loss. In previous bear markets, we've gotten to where the long-term holder loss is around 34-35%. And then the short-term holders are really only holding around 4%. And so while we have had some pain, the long-term holders are soaking up more of those coins in loss. We haven't really gotten anywhere near the previous bear markets where, let's see, we got down to 34% for long-term holders, and we got down to 4% for short-term holders, and then similar 35 and 3. So it's basically just telling us that while we have had pain, we've had capitulation of long-term holders. If we kind of look at these on a whole, kind of zoom out, it would seem that we still have some time, some duration, some pain to sit through, where we need to grind a little bit lower, see a little bit more coin distribution, where the long-term holders continue to be the ones with high conviction before things can turn around, especially considering the macro headwinds that we are facing. Moving on from there, we do have a quick look at Will Clemente's analysis this week. A lot of his stuff was pretty similar to what Glassnode featured this week and what we've gone over with previous weeks. Looking at miners, they're looking at the Pew multiple, basically the miner incomes at a low. They didn't really seem worth sharing, but two things that I did find interesting was Will's look at sort of the long-term perspective. And, so people like maybe myself or Imran, where we are interested in the space for kind of the long-term, kind of a call option on the monetary system, basically not being able to hold up over time, not so much looking to speculate on the short-term action. That's why these kind of long-term charts caught my eye. So the first one on the top, we're looking at the number of active entities in Bitcoin. And basically what Will's pointing out is you could see there's a pretty significant trend where no matter how deep the sell-off, no matter how much pain is felt, the number of entities, the number of addresses just continues to rise, and it makes higher lows. And that seems to be the case right now, assuming if we don't get a further pullback, that this doesn't drop below the previous cycle high. And then the other one worth noting in terms of the long-term perspective has to do with the Bitcoin Lightning Network capacity. It's consistently grown, even though the significant drawdowns in price, meaning people aren't being scared away. So the Lightning Network's Bitcoin's layer 2. It allows kind of future network utility to grow, but it's probably worth noting that even though it is growing, it's pretty small overall. Only 4,000 Bitcoin in total have been committed to the network. And then if you're not familiar, I'm going to do my best to do a quick overview of what the Lightning Network is. Like I said, it's a Bitcoin layer 2. It sits on top of Bitcoin, and it allows for kind of peer-to-peer micro transactions without there having to be those transactions submitted to the blockchain. It's instantaneous payments because of that. And it's the type of thing that while you're getting a country adoption like El Salvador, it's the type of thing where that's what allows them to lower the remittances and not have a third party get involved with sending money. It's this Lightning Network. And it's also what potentially could allow Bitcoin go from store of value unit of account to medium of exchange. So that's kind of why the Lightning Network is important to keep track of in terms of the long term, because it's probably going to be a big part of its growth into the future if it's going to turn into this kind of new money that kind of crypto and Bitcoin people are banking on. And that is this week's on-chain.
In crypto vol this week, if we look at the realized, kind of fell off a bit of a cliff, and that's just, big moves being taken out of the sample, similar to what we said with is happening with the vol target funds on the S&P and things like that this week. So that kind of happened last week. So you saw about a 10 vol point drop in Bitcoin realized, almost a 20 vol drop in Ethereum realized. So that's kind of short dated 7-day. But look at what the implieds did. So as usual, the implieds got crushed into the weekend. There was two reasons for that. One was that people who had bought short dated calls to play the rally took profit on them. And then on top of that, you had your usual DOV weekly sellers come in and do what they love to do and smash the vol down a good 10 points, right, or more. So again, as usual, we see a bit of an overshoot in Ethereum because that's where a lot of the selling. So the implieds went below the realized by a reasonable amount into the weekend and then has bounced sharply out of it, right? I mean, pretty impressive bounce going from 80 back to like closer to 100 in the weeklies as the market has sold off. So obviously it's got a reason for it because it has kind of sold back down again, even though it's been a bit more orderly in the way it sold off than we've seen of late. And then Bitcoin's doing the same thing, right? Gone from low 60s back up to mid 70s. So implieds have popped, partly because the market sold off, but also because the market's a bit concerned about CPI print, right? CPI has been moving the Bitcoin price quite a lot recently. So the market is assigning some risk premium to that and bidding for gamma because they don't want to get caught short gamma for that print, basically. So yeah, so that's the realized. So implied realized gap has spiked. My personal feel on this is that whilst this is often what happens when there's an event, a very short-term event that the market thinks could move the market, you get this gamma bid. But I do think post the event and with the DOVs coming at the end of the week, you're going to see a bit of a destruction in those short-dated vols, right? So I wouldn't be chasing gamma here. If you didn't pick up the gamma down at 80 or sub 80 on Ethereum, like I was saying, was probably good value on the crypto dashboard last week. If you didn't manage to get that, I wouldn't be chasing it here at 100, basically. You've kind of missed the trade, I think, to be honest. Yeah. Okay, that's realized. Now, if we look at what term structure is saying and doing, term structure, you can see here, the moves, it was a relatively flat term and it's kind of spiked in the weeklies. You see that spike in the weeklies. You see the kind of end of July out to even December, all drifting down a little bit there. Right? So you're seeing a bit of pressure on the Vega, but you're seeing the super short dated gamma, which contains the CPI print. You're seeing that catch a bid. So you're getting this big sort of distortion in the market, which you typically get around, event risk, basically. So the market very much in crypto saying this is an event risk right now. Okay. If we look, and that's the same for Ethereum as it is for Bitcoin. Yeah. And Ethereum, longer dated vol, the entire curve shifting down. And you can see that there with that long end, kind of the pink line below the blue line, right? So just the gamma really catching a bid for Ethereum as well. If you look at the kind of the time series of how the vols reacted over the course of the week, it was just pretty much a round trip, right? They started at the same sort of levels they are now, got collapsed into the weekend and have recovered pretty much back to where they started the week, right? So that's been the round trip. And that's why it's kind of useful to look at that time series as well as where the change on change is week on week, because then you get to see what kind of happened in between. Yeah. So that's what the vol and the term structure have done. If we then look at the skew, it had been flattening and going sort of less towards puts than it was. It was still for puts, but not as extreme. We had that across the curve as, we were getting a bit of optimism that we might stage a bounce. Some of the liquidations are kind of done. There's a bit of healing in the market last week, it felt. So people started chasing calls and that started to flatten the skew. That's kind of now started to reverse again, right? And as we flagged on Friday, the skew had kind of overshot a bit and got to levels that were looking attractive to start re-hedging and putting those risk reversals back in place to benefit from a pullback, right? So So the put skew starting to recover. And again, in line with the idea that you can protect yourself with risk reversals and they're not looking so expensive, or they weren't looking so expensive. Skew now looks more fairly priced, I would say, given the macro risk and the need for protection against the further leg down in crypto. I think it's kind of about right here. So no clear trade here. I mean, if you're not already protected, there's still probably a reason to do it, especially given all the Bitcoin selling that's likely to come in August. So I'm not particularly fearful of being short calls, basically, right? Any calls with a strike above 25K, I think you're relatively safe selling, basically, right? And you can use that as your funding leg for the protection that you need. Yeah. Okay. That's skew. If we then look at flows, so the big flows really that we saw last week, you can see Bitcoin 60-40 for calls. We saw July call buying between the 20 and 25K strikes. That's circled here, whether it's mid-July, late July, it's combination. And a lot of those calls were then taken profit on and sold back out towards the weekend, basically, right? So people trading in and out of those calls, right? So a lot of that volume reflecting both directions, right? Calls and buys and sells. Then you can see some short dated strangles got sold, 19K, 24K. So people are like trying to earn some premium there, selling that. Some of that may also have been against DOVs and things like that. And then you've got these debt call spreads that have been bought, right? The 25K, 35K call spread, just a longer dated, long expression. We've been talking about these for weeks, right? These are kind of the favored play right now. If you're not sure when the bottom's going to come in, but you want to be long for longer term perspective, longer dated call spreads are the obvious way to do it, basically. Yeah, especially when vols are in the 60s or whatever, and not in the 20s and 30s like they are in equity markets. Okay, if we look at the Ethereum flows, really, quite a bit of short dated stuff going on still. So, the usual DOV hedging flows and short dated speculative put buyers, call buyers, things like that. So I haven't bothered highlighting them. But what I have highlighted is the December 1,300, 2,400 call spread that went up in about 7,000 lots, decent clip. And then a really interesting trade is the September 3,500, 10,000 call ratio 1/10, right? That's an upside convexity trade where, obviously there's two-way, right? But it may actually be, it may be the other way around, right? Now I come to think of it, given that there's such low premium options, that's not the sort of trade that I don't think you'd put on as an opener. So what is probably happening there is someone has been long the September 10,000s from a while ago, right? And they've said to themselves, well, that is dead money. There's no way that's going to do anything for me. So I'm going to take all the premium out of that and roll it to however many I can get in a closer strike. So they basically sold all of those out. They probably had 30,000 of them. They sold them out and they said, okay, I'd rather own a few thousand of the 3,500s because at least that might have some meat on it if we got a sharp rally, right? But the 10,000 are never going to have any meat on them, basically, right? So I reckon that's the trade, actually. That's probably what's been happening. So market makers have probably taken the long side of that 10,000 strike, and the end user has probably taken the short side because they're rolling down their strike. That's the only way that trade makes any sense to me. Okay. And anyway, then the last thing to look at is Solana. Probably gonna, keep that as a bit of a regular feature in the show now. So some put selling going on. I mean, it's all short dated flow, right? So it's all at the end of July. You had some 32 and 22 puts being sold in about 5K clips. So not monstrous, but something. Then you had some 40 calls being bought in the 15th of July, apparently. And then you had a call spread being bought in the 23rd of July, 44 strike, 50 strike. So still generally bullish flows that we're seeing in Solana. And actually, you look at the price action in Solana, it actually feels like it's holding quite well. Normally, given it's a higher beta, you would have expected it to sell off and be below 30 by now, given that cryptos are selling off again, but it's holding above 30. So that might suggest, might explain why people are more interested to trade calls. And you can see 80-20 ratio in calls being traded again in Paradigm, basically, right? So, and then finally on the curve on Solana, realized vol remains at around 90-95. So those vols have continued to come down, right? So from vols end of July to September vols being in the 125 to 30 range, they've shifted down by, nearly 10 points because the realized just isn't performing. So those implieds just are really struggling to keep such a heavy premium, basically, right? So you're seeing the curve collapsing, kind of in line with what's happening everywhere else, but the magnitude of the numbers is bigger because the absolute level of the vols in Solana was very elevated at 130%. Yeah. Okay. Anyway, that's it from me. If anyone's got any questions, thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.